Hi there, I'm Tyler Ballhorn, and this is the Stockscores Market Minutes for January 24th, 2014. This week, I want to talk about alpha and beta. Stock prices change because of alpha and beta factors. Alpha are those specific to the company's business. So what are the company's products? What are their earnings? Who are their management? How does their balance sheet look? Those are all alpha components. Beta are those elements that are specific to the overall market and sector. So a gold stock, one important beta factor is, of course, the price of gold. Overall, the general state of the economy, the political environment, the overall trend of the market and the psychology around the market are also extremely important beta factors. Now, it tends to be that the larger companies are more sensitive to beta. Obviously, a large multinational company is going to depend more in terms of earnings on the overall state of the economy than a small company who's designing their first new product. But it is alpha that allows you to beat the market. If you want to find those stocks that are outperforming, you need to find alpha. And that is relatively simple to do because the more abnormal the price action in individual stocks, the more there is alpha in play. Now, if we talk about the price action in the overall market, the more abnormal that is, well, then it's harder for the individual stocks to move against the market's trend. So if the market is having a big down day or is in an overall downward trend, then it's going to be hard for individual stocks to go up. If they are going to go up, they need very abnormal price and volume action. That is the one key sign that the stock is trading on alpha and able to outperform the overall market. So if you want to find stocks that are going up in a down market, you need very abnormal activity. If you want to find stocks that are going up in an up market, then abnormal activity is not as important because the beta factor is going to help. Now, many of you probably know that the last couple of days in the market were extremely abnormal to the downside. The Dow lost over 500 points over 2 days. And yet there was one stock on Friday, which I traded, which was able to make really very good gains given the Dow was down over 300 points. And that was Ariad Pharmaceuticals, a stock that was trading higher on rumors that they might be bought out by a larger pharmaceutical company. It was the most actively traded stock in the North American stock markets on Friday. And you can see here by this chart, which is a 30-minute chart going back 15 days. You can see the market action on Friday and even Thursday was strongly to the upside in a market that was very much down for the day. But notice that the volume of stock traded over Friday and Thursday was much more than the stock normally trades. So there was abnormal activity there which was able to allow the alpha factor to outweigh the beta factor. And that is something to always keep in mind when you're trading the market. If you want to outperform the market overall, you need to focus on alpha. All right, so here's a chart of the S&P 500 going back 3 years. Obviously a big down week this week, but what I want to highlight is that the long-term and the medium-term upward trend lines have not yet been broken. We're nearing the point where we should bounce off of that steeper upward trend line. You can see that line that's cutting from sort of just before January of last year until now. So we've been on a fairly steep upward trend in the overall market, and this market ran away from the trend line. And if you watch my videos enough, you'll know that stocks and markets that run away from their trend line almost always come back. So my expectation is that in the short term, we'll see a little bit of a bounce back next week. But if we do break that steeper upward trend line, then we've got some distance to fall before we get to the next long-term upward trend line, which goes all the way back to 2011. What's important to recognize, however, is that this market is still in a long-term bullish trend. Now, we could be at the top. Obviously, when there's weakness, we always question whether we are seeing the top in the market. But until those trend lines are broken, I wouldn't get too worried about the state of the overall stock market. The Toronto Stock Exchange has not enjoyed the same long-term upward trend that the US stock markets have enjoyed, but it has run away from its trend line over the past couple of months and looks likely that it's going to pull back to that trend line. I think it'll maybe pull back for another week or two, bounce off of the trend line, and then resume its move up toward that long-term horizontal resistance. So short-term, there's some bearishness there, but long-term, it remains a bullish market. The treasuries have risen over the last 3 weeks and are coming back into the shallower downward sloping channel that started the middle of last year. So that's a sign that interest rates aren't going up as much as people thought. Of course, as this market goes higher, interest rates go lower. And that's a good thing for the overall stock market, and really a good thing for stocks in general, because lower interest rates improve earnings, allow easier access to capital, and also make bonds less desirable for people investing. If interest rates are lower in a bond, you'd rather buy a stock and the yield that comes with the stock. So that's a positive for the stock market. The emerging markets pretty dismal week last week, but still stuck in that long-term sideways trading range. You know, emerging markets had a great run from, say 2009 until the middle of 2011. They broke their long-term upward trend line, and they've just been basing ever since. That's okay. I mean, if we went back 5 or 6 years on this chart, you'd really see the considerable upside move. And now these markets are taking a breather after being the focus of the world. I don't think emerging markets are the place to be right now, simply because this chart is stuck in a sideways trading range without a trend. US dollar broke its upward trend sort of middle to late last year, and it's been forming what we call a pennant pattern. I've drawn that little pattern on the right-hand side. We're testing the lower boundary of that pattern, so we could see the US dollar break down through the floor on that chart, but it hasn't happened yet. It could just as easily break higher in the weeks to come. So I would call this a little bit of a pessimistic chart, because we did break that long-term upward trend line and we're now consolidating. The idea is when you have a pennant, the trend into the pennant is usually the trend out of the pennant. And given that this market went down from July until November, and now we're in that consolidation phase, the expectation is that we likely break down out of that pattern. The long-term chart of gold is a big turnaround this week because it has broken that steeper downward trend line. And that is a sign that the gold market may actually be stabilizing and likely to move higher. So I think that, if you read my newsletters, you'll know that I've bought and featured a few gold stocks in the last little while, with the caveat that we still need to be cautious. Well, I think we can be a little bit less cautious now because of the break of that downward trend line. There's still lots of pessimism to overcome. I don't think this is going to be a market that rockets straight up, but I do think that we're seeing some good opportunities in the gold mining stocks, and you got to trade those when those good charts come up. Oil market has been bouncing off of support the last couple of weeks. It hasn't overcome the pessimism that's been in place for, say, 4 or 5 months. And so I call this a neutral chart. It's generally a chart that in the long term is grinding sideways. There's not a reason to buy it. There's not really a reason to short it. Although some of the energy stocks are finding favor simply because money is rotating out of the really overbought stocks and into some of the oversold energy names. Fear took a big jump this week. You can see that big jump on this chart Thursday and Friday. This is a daily chart, by the way. But in the big picture here, we're still in a downward trend in terms of the VIX. And so I don't see real strong signs that the market is panicking yet. I think what we're seeing is some profit taking in the overall market. Still something worth watching. I mean, things can change very quickly, but at this point, I'm not ready to call an end to the long-term bull market. So, US stocks, bullish, long-term, bearish, short-term, same for Canadian. Gold, still neutral because we are still fighting that downward trend, but it's been pretty good lately, so I'm going to give it a short-term rating of bullish and neutral on both the long and short-term for oil. US stocks are making a long overdue pullback to their upward trend line, but the long-term bullish trend remains intact. Canadian stocks are pulling back as well, but have more upside potential until resistance. Gold has broken its downward trend line and could be a source of longer-term opportunity, so keep an eye on some of those stocks. Oil is uncertain, and fear in general has increased. Well, that has been the Stockscores Market Minutes for January 24th, 2014. Have a great week in the market and trade well.